Welcome to TradeTheNBI.com. This is John. This report is for the 13th. It's not a Friday, but markets are giving a little bit of that pullback because this, again, when you meet with the green and cyan, the green better overtake or you're going to have problems. And that's exactly what you got. Now, it's modest from a DOC standpoint, and we've broken in above the negative 13.5. So slight improvement of shakeout, and that will give the next moves. This is where you get that effective A, B, C kind of setup. Assuming that happens. For now, we are in a, I would call it a modest short context, because to be full strength, you've got to have E steel cross below cyan to really give it the once over as far as significant collapse. I mean, here we had the DOC spread breakup that took place right here. The next bar after that, you had green under, you had steel under, and then you had the crossover of red carried through, which is where the purple comes in. And of course, we dipped below the red line at that particular point and created a massive decline, which we knew we had those values. And guess what? We're right back to similar numbers again and again. This was simple because we had the 61%, 2916 level. It didn't take long for that to get breached the other day, and it's easy. I said, hey, you can be short below that, and boom, right down to the 50% we went. So quick, clean, easy, straightforward. All of those adjectives described beautifully. A little bit more strength right here as the NASDAQ exactly supporting right off the 50%. As we still have plenty of liquidity to keep things right where they are. And again, the battle at the euro is right at this 50%. In fact, we're forming what you might even begin to consider as a descending triangle. And from a breakout standpoint, that has potential, except for right here, we're seeing the earliest signs of a rejection of cyan to green, but short-term buyers are still keeping this going, and I would imagine the U.S. really is getting desperate to make sure the euro stays above that 110 level. That's the last thing they want to see is a dip below there. Oil just stabilizing in that same range. It's not going to go anywhere. There's plenty of supply, which makes it difficult, and gold is just only going to continue its rise. I don't see that abating in the near term, simply because of the dynamics that exist out there as far as currencies go, and this is central banks trying to bolster their positions. So from a 5K, well, we have to look at it from previous day, which would have been, where we began the decline here off the DOC spread. We came in here with a little positive press. Green pops above the cyan for just a little bit. They kind of reject right here and it crosses back below, but there's still enough momentum for the upside before you get the steel crossing back below it again, giving a cleaner sell. That dip down produced what equivalently would be a fairly decent buy from this crossover here, but it's the first pop coming off of this kind of depth, and usually what you'll get is a little pop. It'll hit resistance. Sometimes usually goes past the 23%, usually gets the 38 or 50. But you just have to watch, because then you'll get that rejection. And clearly it kind of flips when you dip below right here from a steel standpoint, because you're in this continuation downturn. It accentuates and then boom, gives a little bit of a positive read until it crosses back below again, and then another positive cross above, which led to the little pop, and the following Fibonacci highs, which met it right there. Clean DOC spread gave us back to the lows, and so while this is an important thing because it's part of what I'm in the process of programming for an identification. It's identifying the DOC spread, locating where the steel is. Does it cross that red, giving you a warning that that may end, and then crossing above the steel at the same time? You're not having this breakdown in magenta and that, which in this particular case was still happening. So it wasn't enough to bolster the situation. But then that flattens and turns around, and boom, you get the positive aspects of the crossover of yellow above magenta, coupled with the dip of orange green already above. Now, The reason this doesn't turn green and it waits till over here is because it's waiting for the red DOC to achieve that negative 13, because at the end of the day, you do have to have some of those things actually get there. This is a question of how aggressive you want to be. This is one of those where buying at the 0 level gives you the potential to be like really free to do a lot of different things. So I pointed out because you can be aggressive in those situations. It's just a little bit riskier. So this is the safe trade where it turns to the orange because you crossed above, and you also have the green over cyan. So all those clear signals, and you can see it still just kind of floated across for a while before reaching that 100% move. So all in all, it works out fine. But then you get these DOC spreads, and you're unable to get the steel crossover, even though it comes above red. It's not able to take over cyan, nor do you get green even responding in the slightest. Even on this little pump rally that started with the crossover right here, the higher pivot that took place, you had cyan dip below red for just the briefest of moments and then put in another sell, and that led to the bottom move that we're seeing right now. And we can actually enlarge this just a little bit because that was a kind of busy day. You can see the breakdown that took place. We had the steel cross below, spike of the orange here. At the same time, steel is falling, green, red, all of them trailing lower. Doesn't convert until over here on the broader setup, but you can see this is where I look for these warning signs early, and depending on how you're playing it, you can adjust, either being just a fraction early and taking your gains, or getting into the opposite direction just a fraction early. And with no reset of steel after this initial decline,
order filled.
Taking a little bit of gains on this drop here as we just break below that 2870 number. But the steel relationship, when you don't have the reset of the crossing of cyan, becomes a nice little power play to go with. I like to confirm it with the 50K in this case because this can bounce up and down quite a bit. I'm usually looking for it more in the sell side, simply because unless I've got green over red at the same time I'm crossing and my orange dip, I'm not really excited about it from a long standpoint. It just doesn't pay off very well. And in this case, even when we had the little bounce, there was still no steel reset at that point, but it did respond to every time a little crossover above, but then as soon as it crosses below, you get the decline. You get support when it popped back above, and then boom right here once it crossed below. So it gives these additional entries, and then I look for, hey, I got a nice previous algo leather right there, level at the 2880. So hey, that's usually good for a 10 point, back down to the 2870, which is exactly what I was looking for right there. And that's why you heard it give that a little announcement. So these are effective ways to handle these concepts. And as I put that into actual program mode, I'm even going to create a function that is a function for all the criteria for a DOC spread that will allow you to, if you want, to build additional details or even alerts off of it, because I think that gives you an opportunity to effectively see how those things function without overdoing the chart setups and that. My whole goal has been to try and just get this as clean as possible to where literally you're able to just follow color changes, and I like having the Morganacci simply because it gives you a pretty good idea of what our expectations are as far as price moves, and when they correspond to, you notice how the 50% right there corresponding exactly to the 2880, you get those linkages, and that's kind of normal. It's just one of those things that people think of them as confluences, but not really. It's because of the math of it. In this case, the 23 turned out to be identical for the 2880 as well. So, but this gap play between the two algo moves, not unusual, and we're just going to continue to go with it. This volatility has been excellent. No complaints with it whatsoever. So as always, trade well. I don't want to go too long here. We'll talk to you later.